What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AMC for AMC Entertainment. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We've talked about the stock extensively on this channel, and the main thing I want to point out here is that this still is in a nice, firm daily downtrend. A big red flag for AMC is the fact that IWM, the Russell 2000, has been aggressively breaking down outside of this balance area the past 2 days. And AMC being a part of that, obviously that's not going to be helpful for AMC rotating to the upside. So with that out of the way, back on over to the AMC chart, what I want to do is clear the drawing set and really start from scratch with only the most important levels left on the chart. So you can see, and again, if we just come in and paint with broad brush strokes, this prior area of support, then flip to resistance right here, that's an important one. We've known about that. Close to 3150s, it's slightly a little bit lower, maybe it's 31 even. We had this area of resistance, it's way overhead. I'm not saying it's in play. I just want it on our charts. And then the last thing I'll do in terms of overhead levels is just quickly come in and map out our dominant resistance trend line, something that looks like this. Okay, so anchor point, touch number 1, 2, and we're very far away from it as of right now. Now, what do we have off to the left here before peak euphoria kind of kicked off there in late May, early June of last year? Let's zoom in on that section of the chart and just make sure that we have those supports underneath us mapped out properly. So what we had from in the past was the top end of the flag where the breakout stemmed from around 14.25, and then anything underneath that, we had the prior high here as well as the pullback low. Let me see if I can zoom in on that a little bit better. There we go. So prior high and pullback low at about $12 as well on the chart. I'm going to scrunch it up a little bit, and then the other thing, the last thing we'll point out in terms of levels underneath us is this gap from in the past. I do want to just make sure I'm getting this properly. There we go. So here we are. There's the bottom of the gap at 1663 and the top of the gap here at 1727. That is technically still open, and maybe it acts as a downside magnet considering that we are continuing to break down here and we're hovering just above. Now, with all of that being said, what's the most recent trend been? Well, it's certainly been down, right? We have highs, lower highs, lower highs, and lower highs on today's session. We have an inverted hammer that closed on today's session as well, indicating a fake break up and out of the 2-day balance to the upside, and instead we closed dead on the lows, now giving us a 3-day balance. So on any downside rotation underneath the 3-day lows, let's go ahead and map that in there as a price level. Anything that breaks underneath 1793, call it 18 even, you're looking for that gap to fill underneath us that we just pointed out from 17.25 down to 1663. After that, we have 14.25 and then $12 even from the high and then the pullback low. That's what we're seeing to the downside, and it does look like a likely scenario to come into these downside targets based on the trend being firmly down and the fake break that we saw on today's session. We can also map this in as a prior area of support here, here, and kind of here, ultimately then turning to resistance the very next day. Notice that we couldn't clear that on today's dead cat bounce. So let's zoom in on the 30-minute time frame now and just evaluate this a little bit further, right? You can see we were trying to build a new 30-minute uptrend with higher lows as well as higher highs trying to form. That was all taken back into the end of the day here. Again, another bearish indication. So what we'll do is consider this a fake breakout. We're not really going to evaluate that with the Fibonacci's. However, what we will do is evaluate the downside with our Fibonacci's. Coming from the top of the sort of move lower to the bottom, our 38.2 is currently sitting at 1862. And in the post market, we're actually substantially lower. We're trading 1787 by 0, it says on the ask, which is fairly comical. But if I just turn this on, we're not actually at 0, right? If we just zoom in a little bit, you can see we're starting to dribble a little bit lower and taking out the low of day. So once again, another piece of bearish information that, hey, maybe this does break down tomorrow. Note that we've been consolidating in 3 days. That means that it does not require a dead cat bounce before the move lower continues here. We've just been spending we've sort of been consolidating rather sideways through time instead of upward in terms of dead cat bounce. That's all I'm getting at with that. Don't expect a dead cat just because we've seen aggressive selling. No, we've just been in a 3-day range. We've digested this area enough. If the bears are ready to take it lower, they certainly can do so underneath today's low into those downside targets. The only way to get bullish on AMC is if we can take out 2075 to the upside, that flush point from touch 1, 2, and 3 here. If we take it out, the first target's going to be from that next lower high, which is currently right around 2382. It's not really going to move. I don't know why I said currently, but that's the upside target if 2075 is breached on solid momentum. I don't really see it being a likely scenario, but I did want to point it out just in case there's a crazy turnaround. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.